Welcome to this special video on confluence exit signals. What we're doing today is we're trying to identify a hard stop and 3 caution signals per strategy and give you a little bit of an alternative way to consider how you may manage exits. What we're looking at today is 1 hard stop that kills a trade outright, time to get out, and then 3 independent caution signals from each or potential dimensions that we can look at. Rather than getting out on our first touch of any of our exit strategies, we're looking at a slightly alternative approach where we watch, we partially exit, and then we exit completely. So if we have an exit engine which looks at this, let's call it a confluence engine, we've got 4 strategy sets, each of which potentially merits looking at a different signal or set of signals. So that's what we're going to look at today. Now, as I said, this isn't common practice in terms of doing this. The reason for looking at this as a potential approach is, of course, we use confluence factors for entries. It's not just often one of these confluence factors that has to be the case, but several. So we're just being congruent with the way that many traders manage entries. Consider it, have a look. And of course, you can test it in your own trading before putting it into practice. Anyway, let's get into the session and give you some things to think about. Hey, as I said, normally what we do is our first signal. So we may have 3 or 4 different signals. We may have a moving average price cross. We may have a signal line of the MACD going on over above the histogram. We may have a failure to move in a certain direction for a certain period of time. And if any of those are triggered, then we would exit the trades. That's the standard, as well as our standard stop and take profit. Confluence is a graduated response across signals. What this does is it potentially filters the noise that one signal may give. And if that's the case, then it could let winners breathe. It is more to define, it needs the right mix, and of course, it can lag fast reversals. So in some cases, in some market conditions, first signal may be the way to go, simply because it's a high exit frequency and it's fast responsive. So if this is in response to a particular event, for example, then first signal might be fine. But invariably, if you have 2 or 3 signals that you're looking at, then quite often 2 may be triggered at once, and that may be sufficient for you to get out completely. So what we're doing is we're comparing a standard approach versus a new approach. And as I said, we're not being prescriptive about this. We're just suggesting that this is maybe worth looking at. Before we start, the problem with confluence is not all confluence is equal. 3 signals sounds great, doesn't it? But often it isn't. If we have correlated signals which are going to do exactly the same thing, and we're just counting the same signal 3 times. We often see people use an RSI and a stochastic, looking for overbought or oversold positions on the same chart. Really doesn't help very much. Choose one or the other based on evidence is the way to go. So correlated signals, watch out for that. We want something that's sequential, so likely to trigger one at a time, not all together on the same fast reversal candle. Now, in some situations, this is okay, but through this, there's no graduated response. If your settings are too tight in an attempt to make sure that they don't lag much, there is a danger that your 1, 2, 3 ladder collapses to a single binary trigger. Hence, it's no different to a first signal and out approach. And then, of course, one thing that we've already made reference to is our signals have to be fairly responsive. If you've got a lagging stack where you're looking at a 50 EMA or a 20 EMA cross or a MACD cross, these are all fairly lagging if you have the standard settings. By the time all 3 or any of the 3 fire, the move is over. Your exit is late every time. So what we've got to consider is how we're going to set these up. And one way to do this is to make sure that we pick from different dimensions. So we don't want 3 from the same row. So where prices could be at proximity of the next key level to where we are, or a prior swing level. Momentum could be an RSI or a MACD or a rate of change or a momentum stall. Behavior over time could be a minimal move in X number of bars, so it hasn't moved more than one ATR in 5 bars. Volatility could be an ATR contraction or a Bollinger Band squeeze. Time opportunity could be, again, something like N bars, it's stagnant, or a session change, or approaching news. And price action, of course, we've got various types of price action described. But reversal price action is reversal price action more often than not. It's just a slightly different picture. So if we pick if we pick three, one from each different, if we pick one, if we pick three from different dimensions, then it's three genuine confirmations. However, what's key is that the rows that we pick and the individual signals within those rows may be strategy dependent. I'm going to talk a little bit about that today as well. So this is the framework. So we have a hard stop where our trade idea or thesis is dead. We close everything, no debate, fires independently and overrides all of our confluence signals. So that could be an example. An example of this could be a break of resistance, moves back into range. Then we look at our potential confluence signals. So proximity target is the distance to the next key level, less than 1 ATR. Momentum is fading. So momentum signals such as the signal line in a fairly tight MACD has now moved above the histogram if you're long, below the histogram if you're short. And then has the move stalled in time? Nothing's happening. Over a number of bars, the opportunity is decaying. The buyers seem to have gone. There may be a bit of repositioning, but maybe just taking that as a note of caution is worthwhile. So what we look for is, are any of these in place? And if so, how many? If we have one signal, we could watch it. We can tighten stop, no new additions. If there's two, then we can partially close, possibly 50% and lock in profit. 3 exits, we close the remainder. Now, it's up to you to move this process around a bit. Some people may say, right, what we're going to do on one signal is partially closed, and on two signals, we're going to take an exit. Bear in mind there may be other exits around this, such as a time-based exit. Or a single candle move over XATR. So this is not the only exit you've got in place, but could be a way of managing exits without giving away perhaps more than you need to. So let's look at strategies. So if we look at a breakout, then really a breakout, which subsequently becomes a momentum trade, the move has to keep on moving. So our hard stop is fairly obviously it moves back into the ranges I've already suggested. It's done. Confluence factors may be our proximity. So how far is it to the next level? That less than 1 ATR progress through a breakout bar in 5 bars. So there's no follow through at all. And that MACD signal line crossing against the direction. So there we've got essentially 3 potential, fairly easy to look at confluence factors. So your aim is to define whether 1 is caution, 2 is partial, 3 is out, or indeed 1 is partial, 2 is out. Test both. Moving on to another strategy, trend continuation. So this is a close beyond a previous swing high, so the higher high. So the higher high or higher low chain has been broken for longs and vice versa for shorts. The trend skeleton has just snapped. We're rocking and rolling in the wrong direction now, and we've actually moved beneath our previous swing high that we thought a move above it would carry us on to riches. It's actually not that different to what we've seen in the previous. In that the breakout ultimately becomes a trend, and what we're doing here is we're trading a continuation of that trend. So those 3 confluence factors still work. It's only the hard stop that changes, really. Now it gets a little more complicated. If we look to strategy 3 of 4, what we're trying to do is, with mean reversion, is snap back to a medium point. We're fading a stretch or an overstretch in market. So our hard stop is fairly obvious. Let's use the example of a break outside of a Bollinger Band, and then we trade once it's moved back inside the Bollinger Band. If it's the lower band, then we'll be trading long when it moves back inside. So a hard stop is when it moves back outside that lower band again. So the stretch is getting worse. We've got new extreme. It's not unwinding. Our trade idea that this is going to revert to a mean is dead. So hence that's where we place our hard stop. Now, in terms of confluence factors, there are three. So first of all, target is hit. Now, this is interesting with mean reversion as it really is the mean. So using our Bollinger Band example where we've got let's say a 20 moving average in the middle and then a standard deviation either side or two standard deviations either side to create two lines. If we return to the middle, then theoretically that's the mean reversion goal achieved. That's the job done. So whichever way you slice it, it's the first reason to book some profit. Some would tend to full exit, or maybe if you're subsequently using this as a confluence factor, then you might partially close and ride with a break-even stop. So, i.e., move your stop just above break-even and take half off. With the example that we've given, what we might look for is an increase in volatility. Because what we have had with a mean reversion strategy is an increase in volatility and then a decrease in volatility as it's moved back into the range. So the extreme causes an increase and then the reverse back to the mean causes a decrease in volatility. So should we see an increase in volatility again, that might be a reason to say, hey, look, maybe this trade isn't going to go very far. So the snapback has lost its momentum. And so maybe one way of doing this is to either pick a single RSI and look at what happens to that. But one thing that may be worth looking at is putting two RSIs on the same chart and looking for a cross. So perhaps an RSI 5 and 14. And what you're looking for is the RSI 5 moving back over the RSI 14. That suggests momentum is increasing with evidence and subsequently that snap back towards a mean has perhaps lost the momentum it may have had. Our third confluence factor is time decay in the same way that it is for breakout. If we're not going to move in X number of bars, then it's probably a new level, maybe even a resistance, and is unlikely to have the momentum, particularly with decreasing volatility, to take it any higher. So C1 can be a profit target or an action target. That's where you maybe take some off. Either is correct, depending on your particular trading approach. So theoretically, you could, if you were using it as a profit target, just have two confluence factors. Subsequent to a partial close if that target is hit. Our final strategy that we're going to look at is a range trading. So what we're trying to do is we're trying to trade a bounce within two set points. Now, obviously, a close outside those two levels, the support to the downside, the resistance to the upside, are our boundaries. So if that range is broken, then it's a hard stop. But of course, we've got other strategies which can take advantage of that. Our confluence factors, again, are slightly different. If our target is hit, it's usually the opposite side of the range to that which we've entered. So if we've entered a short trade at the top of a range, our target should usually be perhaps half an ATR above the lower end of that range. But it can be the same toggle as the MR in that you could partial and ride if there looks as though there's increasing volatility and momentum towards that range. Our second confluence factor may be something like volatility contraction or potentially histogram expansion. If the histogram is expanding at the direction of the boundary, it suggests that new energy is arriving. So increase in volatility or increase in histogram on your MACD would say, hey, look, this could push on through. So C2 and C3, one is to do with momentum, the other is to do with volatility. If either is the case, then that would suggest that there's a potential for break outside the range. If both is the case, then it's fairly reasonable to assume that it's going to give it a solid go and may be prudent to take some or all off. So there's our 4 strategies, and I hope you see how we've used different confluence factors without being outrageous in terms of what we're looking at to give us the guide in terms of what's happening to our position once we're in it. So we've got that hard stop, and then we've got 3 confluence factors. We can set them up as we want in terms of how many have to be triggered to be a partial close, how many have to be triggered to be a full close. You make that decision subsequent to testing it on a chart. And again, as I've said in previous videos, often the best way to do that is to look at previous trades. So just that fast, slow cross is really worth having a look at. Put it on a chart. You can do this on most MetaTrader platforms. Just open one ATR and then drag your second ATR with a different time period over the other one, and you'll see it. If we get the RSA 5 moving over the RSA 14, look for that trend drag, the MACD signal line crossing the top of the histogram if you're long, or beneath the bottom of the histogram if you're short, which suggests that momentum is dying. So momentum perhaps with your RSI, trend drag with your MACD, volatility with 2 ATRs. Worth having a look at as well. The principle of the ATR is exactly the same as the RSI. You're drawing 2 RSIs on for the momentum. You're looking at 2 ATRs for the volatility measure. Whichever way you look, cross tells you the same thing everywhere. Short-term impulse has lost ground to the medium-term backdrop, or short-term impulse has gained ground compared to the medium-term backdrop. We're all familiar with this with moving average crosses. It's the same principle, just using different indicators. As I said, 2 options for the confluence signals. You need to choose your style. Obviously, both honor the hard stop. So our graduated, and option 1 is first confluence factor hit is watch, second is partial. The remainder, the existing exits manage the rest. Or we've got decisive, where the first confluence factor is hit and we partially close and then exit on any of the other 2. Again, looking at trades previously will give you some guidance as to which one you might like to plant your flag in. And of course, what you do if you're moving this sort of idea into a live environment is you'll measure the alternative. But just to reinforce, a hard stop overrides both options. If that hard stop fires, everything closes, irrespective of the C count. So our signal sets a breakout. Our C1 might be less than 1 ATR at the key level, less than 1 ATR in 5 bars, or MACD signal cross trend. The same, it's only our hard stop that changes. Our mean reversion target hit might be a toggle, the partial close or fully close, an RSI 5 over 14 cross, and no progress in X number of bars, e.g. less than 1 ATR. And then our range bound is when our target is hit, much like the mean reversion. We're looking at histogram expansion, or we're looking at a cross of the short over the long-term ATR. Takeaways: make sure your hard stops are set when your trade idea has failed. No debate. Remember, choosing your confluence factors from different dimensions should mean that C1, C2, and C3 each answer a different question. You can be graduated or decisive. You need to pick the management style that fits your discipline and trading style. And that fast, slow crosses goes beyond moving averages, but look at ATRs and RSIs and crossing in terms of giving you some additional information that perhaps would otherwise not be easy to see. And remember that mean reversion and range include a toggle on C1. Do you close it all, or do you partially close and ride a potential overshoot? And the reality is, if the state, to take it back to a previous video, doesn't suit your strategy, no exit system will save a bad entry. That's the bottom line. So I hope that's been useful, giving you some things to think about again. Try your Confluence exit though, and give me some feedback at any time. Let me know what you think. See you soon. Bye bye for now.